way to go.
Oh, that felt good, dog.
Okay. We're live, we're live, we're live, we're live. We're live, we're live, we're live. Alright, so if you can see my screen already, type in, I can see your screen. If you can hear my voice, type in, I can hear your voice. Let's go, let's go, let's go. If you can see my screen, I can see your screen. If you can hear my voice, type in, I can hear your voice. We have just 30 minutes to spare here. So let's get into the deal of the matter. We'll not spend much of our time. So let's continue from where we stopped. Okay, let's continue from where we stopped. Let's continue from where we stopped. So the essence of this call is to understand how to implement previous days high and low, previous days high and close rather, and low and close to increase our win rates. Okay, so we are basically looking at the previous. So let me start by saying this. So I said this morning that the close price is the meat of the matter. Okay, the close price is the meat of the matter. So whether it is bullish or bearish, the close price is the meat of the matter. So is price going to trade above the close price or below the close price, with manipulation or with no manipulation? Okay, so this is the meat of the matter. So from this standpoint, okay, so if we have a bullish candle, bullish for the previous day, right? We are going to mark our what? High, high and close. Bullish, high and close. Bearish, we are interested with the what? With the low and close. So bullish, high and close, bearish, low and close on the daily chart. First step. Okay. Then after marking the high and close or low and close, we will now drop down to 15 minutes time frame or 5 minutes time frame to see if there's manipulation above or below the close price. Alright, that is that. Now let's go on to gold. Let's do a quick recap on gold. Let's see what gold is currently doing today as we speak. Before we go and do our back testing, let's look at what gold is currently doing. Currently, this is a live market. Okay, so gold is currently, this is the previous day's candle close, right? So what do? We mark the close PDC, right? And we have the PDL, the previous day low. Okay, we've marked the close, we've marked the low because it closed bearish the previous day. So we now drop down to 15 minutes, 5 minutes, 15 minutes for us to continue, right, our bias. Mind you, structure is also going to be included. We are doing this in line with what? Structure. Okay? We are not doing it outside structure. We are doing it in line with the structure. So look at the structure currently. We are currently what? Bearish. The structure is currently what? Bearish. We have this morning. We have this mark this morning. We are currently in a bearish structure, and we've seen very clearly that we expect price to pull back into this other block. That was our expectation. Our expectation is that price will pull back into what? This other block, right? Or supply zone, right? Whatever you call it. Other block, supply zone. We have a fair value gap in 30 minutes. So let me use the fair value gap first. Fair value gap is the first interest before the what? So we have the fair value gap, which is currently being respected. And I said all these are still happening above the previous day close, right? But looking at the structure, that might be a manipulation. Fair value gap, 30 minutes fair value gap. Okay? We are currently trading above the previous day close, right? But that might be a manipulation because we still have the structure to be what? To be bearish. You understand that? So this price currently trading above the previous day close, right, might just be a manipulation to trade back down into the what? Previous day low. So what we are expecting today is now price has respected our fair value gap, right? Now I'm already selling already. I've started selling from here. I have placed my sell order already. So I'm already on this position. Let's see. Let me use okay, I'm already on this sell. I started selling when price got into this 15 minutes calendar. Now see there's a 30 minutes calendar and there's a 15 minutes calendar. So I started selling when price got here. Okay? I started selling when price got to this here, the 15 minutes order block. So this is a good entry. Okay? That is a good entry. Now if you meet that first entry, wait for what? For a pullback. Okay? There will always be a retest. There will always be a what? A retest. So using this as an example, we are currently trading above previous day's close, which should be bullish, right? Because if price close as at 2 naira and are currently trading above 2 naira, that means we want to be bullish. But what if that's above the close price was just a mere manipulation to what? To continue selling, right? How do you know if it's manipulation? You look left. Is there an a point of interest that is going to reject that bullish sentiment? Do we get now? If we have the close price here, I have close price. All right, and I see price trading above the close price. Okay, this is a natural bullish sentiment. That means you want to start buying. That's what it means. Okay, but what if this buy is just merely a manipulation for price to what, to continue to start selling? So how do you know if this bullish is a manipulation? If there is a what, there is a point of interest at the left, whether it's fair value gap or order block or supply, that is going to prevent that buy from happening. And most of the time we would have been in an is established downtrend already. This now, so we have to be very 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 careful. So that's the case for today. Gold. Okay, we are currently trading above the previous day close price, but look left, this is lower high lower low. We are pulling back into a point of interest that will most likely continue the sell to the previous day low. So that is example one. So you need to have to back test and forward test to have much more examples, because price will print out in different scenarios. We have different types. Oh, I will. My guy will set it for me. Set it for me. Okay, so my I think my fan the fan was on. Is the voice off now? I think it's clear now. The fan. That noise was the fan. I think it's clear now. Is it clear now? No, no. The fan is off. The fan is off. The fan is off. Okay. Okay, I just refreshed the page now. So confirm. Okay, I just refreshed the page now. So confirm. So I can hear myself from here. So you should be able to hear me. I just refreshed the page now. So confirm. So I can hear me here. So you should be able to hear me. Yeah, so you should be able to hear me. Can you hear me now? Can you see my screen? Can you hear me? Okay, clear. All right, great, great, great. Breaking in between. That will be just the network. Okay, but let's move. So we can see my screen, right? So let me do a recap on what I said about gold here. So let me do a recap. I said when we close here, right? And let me delete all this again. So I mentioned we have a close price close there, right? Then we now saw that when price opened the next day, we were trading above the close. So in that at that point in time, we said we are what? We are bullish in sentiment because when price is trading above a close price, we have a bullish sentiment at that particular point in time. Okay, at the particular point in time when price is trading above close price, the sentiment is what? Bullish. Opposite, when price is trading below the closing price, the sentiment is what? Bearish at that point in time. Okay, at the point in time where price is trading below the close, the sentiment is bearish. Okay, now back to this bullish. Now this can change from bullish to bearish when there is manipulation above the close price. That means there will be point of interest at the left, maybe fair value gap left or other block or supply that is preventing this buy to happen. That means there must have been maybe a sell trend that has been established before that particular day to initiate this sell order. Okay, then price starts trading below the what? The close price. Similarly too, when price starts going below the close price, there might be a point of interest at the left so that this is just going to be a manipulation and price starts trading above the close price again. So that means what we had there was just manipulation, and this happens the Asian range, Asian section, but sometimes it can extend into London too. Okay, so if you look at the chart, if you go and back test, you see how this different scenario plays out. If you back test, you see how this different scenario plays out. Now look at today. Let's now go to the chart for today. So look at gold. So look at what we have in gold. Previous day close, previous day low, because we closed bearish the previous day. So this is the close price. This line we are seeing here is representing the close. Okay, and price came below Asian range, came above. So we have gone below, we have gone above. Okay, we have gone below the close price. Now we are above the close price. Now these two price action has not given us a direction yet, but this particular point now is more likely a bearish sentiment even if you are above the close price. Why do we say so? We are already respecting the point of interest of fair value gap and other block. So we are much more sell biased than buy biased, even if you are still above the previous day close price. Do you get? Even if you are still above the previous day close price, we are still sell biased. Why? Because we have tapped into the point of interest that has a sell trend. So we want to represent this as what our Asian eye liquidity that we said this morning. Okay, our high and our low. So Asian eye has been swept into what point of interest, and we are expecting to what to sell. Is that clear? Is that clear? Nice, crystal clear. I love that. Crystal clear. I love that. Okay, that's for gold. So now let's go into proper. Let's go into proper back testing. Let's go into proper back testing. So let's look at. Let's go into proper. Let's start from. What should we start from now? Let's start from the beginning of this month. Let's see if we can cover from the beginning of this month. We have okay, month of March. Okay, mind you, I know I said other day that we can also apply it for monthly and weekly. What we do for daily. So you can just put at the month now. Okay, let's do this before we go to the daily chart. Let's just do this now. Let's just put this okay as monthly high and monthly close before we go into the daily. Let's see if there's any effect. Monthly high. Let's do this PMH, and let's do this as PMC. Do you understand? We can apply this to monthly, to weekly, to daily. PMC. Okay, so monthly is set. So let's bring it forward. Let's so you go to let's see 4 hours. See how 4 hours. So you can see that when March opened, we started trading above what above the previous month close. We went up, we pull back. So from here, this pullback now is a good. Let's see the Fibonacci. Let's see the pullback. Let's see the pullback. Let's see the pullback. The pullback was a 50%. Can you see the precise? Can I say that this is not just a random a random pullback? Can you see? It is not a random pullback. It pulled back to exactly 50%. Okay, then it bought to the extension and it started what? Taking profits. So this is equilibrium. Can you see? This pullback to continue into the extension is at the equilibrium. and we took profits at the what extension. So you can say that we are applying, you can apply PMC to swing trading. PWC and PMC is for swing and position trading. PMC and PWC can be applied for what? Swing and what? Position trading. Once you have gotten your bias from PMC and PWC, this PMC, we broke out, right? It pulled back. Now, for swing traders, you have to be very patient to wait for break and retest. You wait for days, sometimes weeks, for a break and retest. But when you are catching your move, you are catching it well. So imagine this continuation now. You entered here, and it took this trade took, let's see, from here to here, and this is just 3 days. It took just 3 days for this move to happen. So swing trading also has its benefits, but the question is, can you wait? Can you wait for price to get to your point of interest? Let me screenshot this. Swing trading has its benefits, but the question is, can you wait for price to get to your point of interest or your location? So we apply PMC and PWC for what? Swing trading. So that's just a sidebar. Let me go back. Let me go back to our day trading. So okay, so that's clear. So but now it's clear that we are already trading above previous month's high. So we are pretty much bullish for this month because we are now bullish sentiment. We have gone above close price and above what high price. So we are pretty much very what bullish. So any sell you are having might just want to be what a pullback. So we are not going to be so much like laid back on the sell. The sell is going to be what? Short sell, because the trend is still bullish. Okay, the trend is still bullish. This is a break and retest. The trend is still bullish. So any sell we are seeing, we are to be careful on gold. So let's mark weekly. We have done monthly, Abby. Let's mark weekly. So we can see that we are still this previous month's high and low. Okay, high and close is representing previous week's high and low. Okay, no, sorry, 1 week. So I was wondering how come now. I was wondering how come. So this is our weekly time frame. Okay, now watch. 1 week has passed, 2 week has passed, 3 week has passed. So 3 weeks has what? Has passed. So let's do a back test on this weekly chart. So when the first week closed for the month of March, let's see what happened using previous week high and previous week low. Previous week high and previous week close. Sorry, because we closed bullish, right? We closed bullish. So let's see how that played out. Previous week high and previous week close. Okay, high and close, right? Then we drop down to a higher lower time frame. This case can be like, it can be 1 hour. So let's see. So the new week started. This is Monday. The new week started here. Okay, let's extend this the future, previous week high, and what previous week what close. Now pay attention to what happened. We opened Monday, right, and we started trading below the previous week's close, right? That was on Monday and Tuesday, right? Monday we were selling, Tuesday we were selling, okay? Then Wednesday we are now trading above the previous week's what close. At that point in time, the sentiment has changed from bearish to bullish. So the fact that we are trading below the close price doesn't automatically mean that we'll be bearish. I come again. The fact we are trading below the close price doesn't mean you're automatically bearish. That bearish might be a manipulation based on what? Previous trend. On the trend, we were bullish, right? On the trend, we were bullish overall. We broke and what? We retested. So this sell we are seeing was the pullback that got to 50%. If you can remember, that sell we saw Monday and Tuesday is what? This Monday and Tuesday sell was just a pullback. Okay, then Wednesday we now went above previous week's close. That has given us a bullish sentiment. Now we can't be bearish again. Then we now closed bullish for the week. Can you see? So this is how you use higher time frame also to navigate. That's for previous week. Okay, I'm just showing you how to use how to implement this into your edge. Let's look at the next week, the following week. Let's see. So let's take this off. So the following week was very bullish. The following week was very, very what? Bullish. We closed bullish. So what do? We are going to mark the high and close, preparing for the next week. So at the start of the week is when you mark your your weekly charts, and at the start of the day you mark your daily charts. Did we get that? At the start of the week we mark our weekly charts. At the start of every day we mark the daily charts. We are in part two now. We have left part one. We are in part two. At the start of the week you mark your weekly charts. At the start of the day you mark your daily charts. Write that down in the chat box. At the start of the week you mark your weekly charts. At the start of the day you mark your daily charts. Write that in the chat box. Write it out. Write it out. At the start of the week you mark your weekly charts. At the start of the day you mark your daily charts. Write it out. I have a few more minutes to spend. I don't want this to be long. Very, very brief. At the start of the week you mark your weekly charts. At the start of the day you mark your daily charts. So what we are doing today is introducing weekly, right, with our daily. That's the part two. Part one is just doing. Part one is just doing your previous day and close. We have left part one, now we're in part two. At the start of the week, you mark weekly charts. At the start of the day, you start with daily charts. Exactly. So back to our chart. Let's do a back test again. So these are previous week high and previous week low, right? You come towards your let's now have we now resume for the week. Okay, we resume for the week. Where is it? Monday. Yes. Pay attention to details. Yeah, we are already bullish. We are already bullish. So when the week opened, look at what Monday did. Monday started and was already trading above. You can see this breakout. This is a break and a retest. Very simple. So Monday, we had a clear sign right from Monday. A bullish buy right for Monday. Look at it very clearly. Price pulled back and what broke out of this structure. This is the first buy opportunity, right? But this is the second opportunity breaking out of this. So the first opportunity happened London section at 9 o'clock. Buy. Okay. Price pulled back again, now breaking out of this for the second opportunity to buy. Okay. And that happened at this demand. Demand, or whatever you call it. Okay. Whatever you want to call it, demand or other block or whatever. 30 minutes demand. Very clean. And now this that's the start of the week. Oh. We are now trading above. So Monday, buy. We are starting the week on these notes. Is that clear? It broke out, retest, buy. You can wait for a bullish confirmation on your demand zone. If you don't want to use pending order, you can wait for what? Confirmation. That means you want your candlestick to close bullish. Any of these bullish candlestick, you can use this one, you can use this one, or you can use this one. But your stop loss will be wider. But it's still fine. At least your take profit is certain. This is your Fibonacci, Abi. Fibonacci retracement. This is 3.0. Yes. This is 3.0. 79 to what? 100%. It used the 3.0 Fibonacci OTE. All right. And our extension is where? Yeah. So you see, good. So Monday happened, Tuesday happened. So let me go back to 1 hour charts. Let me go back to 1 hour charts. So once you have marked your weekly high and low for the start of the week, you can now start going to previous day high and close and continue marking the charts. Okay. Once you have marked your previous week high and close for the start of the week, you can now go to your what daily chart every single day to know what is happening. Is that clear? Once you have marked your previous week's high and close, you have already have the first day of the week. Other days of the week, you'll be doing what? Previous day high and close, previous day low and close. Once you have done your weekly charts, the next thing is now come to doing your daily charts. Is that clear? So Monday happened. So let's now investigate Monday into Tuesday. We have marked our weekly yeah, we have marked our weekly high. We have marked our weekly okay. We have marked our weekly high and what weekly close. Yeah. So the next is to what mark our daily. So how the Monday close? Monday closed bullish. So we are going to focus on what the high and the close. Previous day high, PDH and PDC. Okay. What do we now do? Come to what 15 minutes. Come to 15 minutes and you see okay Tuesday. So watch carefully. Notice how price moved during the session on Tuesday. Notice how price moved during the session on Tuesday. This is Asian high and Asian low. Asian high and Asian low. Right? So on 15 minutes, you can see that price started going below, then we broke above. This is the breakout. We broke out, we broke out, we broke out. So we started trading below. Then at London, we saw a what? Breakout. That's the confirmation that we are bullish for the day. So you need to backtest multiple scenarios because the market will print out different scenarios for you. But the same principle applies. The same what principle applies. The same principle applies. So this was the breakout. When price broke out, then as it's pulling back, this is Tuesday, right? No, this is oh sorry, the time is different. No wonder. My time here is showing me something else. What is happening now? My time is my time has changed though. Kí ló ń ṣẹlẹ̀ báyìí? What's happening to my time? Let me see. We are currently at the time is 12:45, right? Okay, I think it's correct. We are correct. We are on point. Why is it showing me something else here? Okay, again, again. Okay, now it's showing me something else here. Asian, London, New York. It's giving me something else. Is it clear? Is it getting clearer? Lover of my soul. Something is wrong here. Something is wrong here. Something is wrong here. I'm coming. Just give me a minute. Let me check what's wrong. Something is wrong somewhere. I hope you are selling gold. Something is wrong somewhere. Okay, O and O is good. Okay, I think it's the broker that is giving me headache. I think it's the broker that is giving me headache. Let me use another broker. Let me use let me use O and A. Let me use O and A. Okay, sorry. Um, okay. So let me use this. Let's go by again. Let's go by it again. So where are we? We said we marked our previous week's high and close here, right? We have marked this guy as the high, previous week high. and we mark this as previous week close. Now we are now starting the day. We started the day, which is Monday. We are starting Monday, yeah. Okay, I think this is correct. So we are starting Monday. So watch. Starting Monday. Ah, kí ló ń ṣẹlẹ̀ báyìí? ALN. Okay. The numbers, New York should be here, London should be here. That's why I'm confused. But it's still the same thing. This first box is for Asia, this second box is for London, and this last one is for New York. But the writings are jamming each other. That's why I'm confused. Do you understand? But we are on track. This is Asian range, this is London range, and this is New York. So we are on track. So this is Asian range, Asian, okay? Asian from 1 to what to 7. That's Asian range. So we are on point. Okay? We are on point. We are on point. We are on point. So what the price do? We said that Monday did what? Monday broke out and what? We for Monday, right? Monday clear. Then Tuesday, let's go to Tuesday. So how did Monday close? Monday closed bullish. Monday closed bullish. So if Monday is closing bullish, what did we do? We mark our high and close for Monday. If Monday is closing bullish, we are marking the high and close, preparing for Tuesday. Previous day high and previous day what? Close. Okay. So we jump to 15 minutes. Now let's observe Tuesday. So this is where we are. Previous day high and previous day low. So as London session is approaching, where is the price action? Okay. Are we breaking out or we have manipulated the closing price? This Asian low. So who can tell me what Asian low did, Asian range did? I want someone to interpret this for me. So what did Asian range do for us pertaining the closing price? Who can narrate this price action? So let me not be the only one talking here. Who can narrate? Someone should tell me what Asian range price did in respect to the previous day close. Okay, narrate this for me. This is the Asian range. This is the previous day close, previous day high. So what can you say here? Before London open, London opened by 8 o'clock here. So looking at this, what can you say? Up here together. Any answer? Or I should move on. Asian range traded above. So we first saw that we had a manipulation, right? When we started trading, we had the what? Slight manipulation below. Price started trading below. Okay, all of a sudden, around 2 a.m. prime time, you can see 2 a.m. prime time into 3 o'clock, we started going above, above, above. By London section, we are already clear that price is already above the previous day's close. So all we need to see now is what? A break and retest. Recent break and retest. So when London opened here, we have the recent break of structure right here. So this is our low and what? High. So this is the recent range where we can start picking others from. Okay? And that's where the buy happened. We start picking what? Recent high and low. This is the next one. Recent low and high. Buy at equilibrium or discount. Then we had the day. Can you see? That's for Tuesday. Then Wednesday, Monday, Tuesday, Wednesday. Tuesday closed bullish. So we do the same thing again. We do the same thing again. Our previous day high and previous day close. Previous day high, previous day what? Close. In this case, so there was a very deep retracement, right? Before price was continued. Am I not sharing my screen? I have to wrap up now. 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 Can you see my screen? Am I sharing my screen? Yes, I'm sharing my screen now. Okay, so good. So we are into what? Daily high, daily close for what? Tuesday, right? Then Wednesday. Let's come to 15 minutes to see what's happening. So look at how Wednesday played out. Wednesday started trading. Let me see. This is Wednesday, 0 o'clock. Some days might be so complicated. It will come below, come above, come below, come above. There's some days like that. Okay. Like in this particular day now, we first saw price came below, came above, came below, then now what? Came above again. So this day was actually messy. Some days will be messy, some days will be very smooth. Every day won't be smooth. Okay? If it's confusing, just leave it. You want to trade the one that are very clean and clear. If you see price coming below, above, below, above, below, and you're confused, just leave it. Unless you want to use the structure, because the structure here is still what? Is still bullish. That means anything you are seeing here above, below, will be what? An inducement, which it is here, to continue the buy. So if you can't take care of the inducement, just leave it. You know what I said? If the manipulation is too much for you, leave it. If you see price coming below close price, above close price, below close price, just leave the market. Let it do what it wants to do. Or else use the original trend, which is bullish, higher time frame, to what? To understand better. Is that clear? So higher time frame here, if you use higher time frame here, you will see that um structure wise we are still bullish. This break of structure was an what? Was an inducement. Okay, so break inducement to continue what? The buy. All right. So let me stop here. I don't want this to be too long. I don't want this to be long. So we take it step by step by step by step, step by step by step by step. So this is our setup for gold. It's still playing out. So I will send us the update on the group. Okay, for more entries. There's a news coming up. I think by 1:30. Okay, I will send us the updates. There's a news coming up by 1:30. Is it 1:30 or 1:45? Okay, it's 2:45. Oh, 2:45. Do you have any question? I don't want this is already 1 hour. I don't want this to be up to an hour. Do you have any question? So what we introduced today was adding the what? Previous week. What we did is what? Introducing the previous week into what? Our buyers. So that means that if I can go back to my chart here, let me, using if I go back to my charts using my weekly charts, so we have established from the previous that we are still what? Bullish. So what do we mark here? We are marking the high of last week, right? And the close of last week. Previous week high and previous week what? Close. I hope you are in class. previous week high, previous week close, right? That's for the week. Then from here, we start doing every single day from Monday to Friday. From Monday to what? Friday. We start doing our what? Our weekly, sorry, our daily what? Chart to charts. All right. So we are starting from Monday, which is here. So this is what we have: weekly high and weekly close. Okay. So let's see how days will play out: Monday, Tuesday, Wednesday, Thursday, Friday. Any question? So previous week high, previous week low. So previous week close, right? Then we have the previous week low for our take profit target or for liquidity grab. Previous week low. Okay. So we are good. Can call it a day here. We continue tomorrow 2 p.m. We take it a little bit step further. Right. Thank you. No question, right? No question. So tell me what's one thing you learned from today. Tell me what you picked out from today. Tell me what one thing that added to your knowledge or what got clear. What got clear today? What did you pick out from today? Because every single time we have something that we learn. So what got more clearer? What got more clearer? What stood out for you? I want to know. What stood out for you in today's class? If it's not clear, watch it again.
Everything. I think that is good that you are all about people's personal growth. But the intentionality that came with that conversation was or is something I really admire. It is important to keep their best in their media and their strength. So I made a post on LinkedIn about multi-talented people and how they
Understanding where we
manage it.
mark our daily
How are
and
you
weekly
able to do
trades.
all different things
Okay,
and still like
nice. Analyzing the weekly trade with different time frames. Yeah. Okay. Who else? Who else? Who else? Okay. So if there's no other one, I think I have to call it a day. So we see tomorrow 12 p.m. and tomorrow morning 7 a.m. All right. Peace out.